you do have permission to unmute yourself or use the chat room, whichever you're comfortable with. But it's 11:30. We're going to go ahead and get started. If some people tune in late, they could catch the rest of it when I upload it or share it rather in this Discord later in a couple of days. So topics for our first webinar. We have market structure shifts, talking about choosing the right market structure shift, what I like to look for when a market structure shift is not required. And we'll talk about that for a little bit. How to use new day opening gaps and new week opening gaps in your trading, how to draw them, how to keep them on your chart. We'll talk about liquidity sweeps, manipulation legs, displacement legs, and that's pretty much it. So we're going to start off with, I have some examples here. We're going to start off with talking about market structure shifts. Okay, a lot of people have the misconception that you have to see a market structure shift in order to buy or sell. That is not the case. All right, when ICT came out with that 2022 model, and he said you need, a sell side raid and a market structure shift with a fair value gap, that is a model. That is not a requirement. It's not necessary. Sometimes I enter long or enter short without needing. I'm not freaking recording. Yes, I am. I thought I wasn't recording. So you don't always need a market structure shift. So I have about 5 or 6 examples here we're going to talk about. Again, I have the chat room pulled up, so if you have questions midway, feel free to ask a question, or you can unmute yourself, whatever you want to do. So here we go. On the chart here, some of these are pulled from the Daily Screenshots channel because they're just great examples, and some of them I found on TradingView a couple days ago. So right here, this is an example. This is an example when I would look for a market structure shift. We have a fair value gap here. All right, we've taken out sell side. I'm waiting to see if this fair value gap gets disrespected. So when it comes to market structure shift, the main thing I'm looking for is, do we disrespect a PD array? So if we have a fair value gap here, I'm watching to see, do we disrespect that? What does that look like? Do we close past consequent encroachment? Do we trade completely above it like we did here? All right, that's what I'm looking for. If we had like a bearish order block here, and we'll look at that in a little bit, I'm watching that bearish order block. Does that send price lower, or do we completely violate that PD array? So right here, we have this fair value gap. Okay, we trade into it there. I'm not looking to go long. I'm waiting. I'm waiting to see if this fair value gap sends us lower, or if we violate it and get above it. We drop down again. We rally. This is when I like to see a market structure shift and see this high taken out, because we traded into this fair value gap, which was used as resistance. Once we blast through that, completely taking out that high, then I feel comfortable buying this fair value gap or this one up here, take it up to buy side. Okay, so let's look at some more examples. All right, so right here, we take out sell side, equal lows here, clearing the sell side liquidity. We rally up. We don't have a market structure shift. If you want to count this high, I guess, but I'm not looking at that. I'm looking at this high here. So clearing out sell side, we don't have a market structure shift. So how can you trust this buying opportunity here? How can you trust this fair value gap? What am I looking for here that gives me the confidence to buy this here? Well, same thing. Our PD array is getting violated. So we have this fair value gap here. After taking out sell side, does this send price lower? Does it act as resistance? No, it completely gets ran through. We also have this fair value gap here. I'm watching that. These 3 consecutive up close candles here, that's one bearish order block. So we trade up into this fair value gap here, small little gap, and we also trade up into this bearish order block. Is any of this acting as resistance? Is price showing any signs of weakness after trading to this opening price of the bearish order block or this fair value gap? No, it just blasted right through it. Did not care for it. That alone tells me that price is strong, we're bullish, and we don't need to take out this high. We don't need a high to form here, come back down, and then take out that short-term high and then feel comfortable buying. If I see PD arrays getting violated, this fair value gap, these consecutive up close candles, this is also a breaker, this down close candle. We have a high, low, higher high, last down close candle is a breaker. Does that offer any kind of resistance? Absolutely not. It gets blown right through. You can trust buying this fair value gap. okay, without needing to see a high taken out. So you don't need a market structure shift in this situation. I have a few more examples here. So another instance here. How can you trust this buying opportunity? All right, I'm sure that we've taken out some kind of sell side, some kind of probably traded into a fair value gap. Okay, I don't have a higher time frame level on here, but we're not just dropping down into a random area. We're trading into some sort of key level. But how can you trust this buying opportunity, this fair value gap here, or this one here? How can you trust that price is going to reverse here and just not continue to break lower? Again, I'm focusing on the new PD arrays. 20, what's going on, bro? You missed like the first few minutes, but it's all good. It's being recorded. Jaser, no problem, bro. Yeah, hit me up if you have any questions, but I'm recording this whole thing. I got you. It's all good. I'll catch you in the next one. All right, so again, how can you trust buying this fair value gap down here or buying this one down here without seeing a market structure shift? Again, if you want to count this high, I guess, but let's just pretend this high isn't even here because I'm not even looking at that. My focus is here. This fair value gap, do we violate that? Yes. How? We close past consequent encroachment. All right. Imagine you're short here. Okay. Imagine you're short and you're targeting something all the way down here. How would you feel if price retraced like this? Closing past consequent encroachment of this fair value gap. This here, if I was short, we consolidated this fair value gap here, I would treat that as a breakaway gap. If I'm short, I would not want to see this fair value gap traded to. Okay. So now, with that in mind, if we do this, completely overlapping this fair value gap without a market structure shift, we're trading deep inside of this fair value gap, which I would treat as a breakaway gap if I'm bullish or bearish, sorry. I don't need a market structure shift. Price is already telling me that we're picking up momentum to possibly go higher, reverse, and aim for this area of up here. That's all you need. Does price violate PD arrays? You don't need a market structure shift. This is a great example here. We trade down, clearing out sell side. I'm sure we're trading into a higher time frame PD array, a fair value gap, a breaker, some kind of liquidity. We're not just reversing out of nowhere, but we trade down. Okay. We rally up. Now, this is an example where how would I know that this high? No, I said that wrong. My bad. This is an example where I would feel comfortable buying. This is hypothetical. Let's say this high right here wasn't taken out. So this large up close candle, let's say it just stopped right here and then reversed. I would feel comfortable buying this down close candle here, these last three. That's a bullish order block. This order block here, I'm watching to see if we're expecting a potential reversal. Price is trading into liquidity, is trading into a fair value gap, whatever the case may be. I'm watching this up close candle here. Does that offer resistance to take us lower, or do we completely violate that and blast right through it? We blast right through it. We had no affinity for this order block. So now what does this become? It becomes a bullish breaker. We have a low, high, lower low. So price can be trading into midpoint of this up close candle, this order block. It could be trading right here, and I would already feel comfortable buying it because we didn't have any respect for that opening price. All right, targeting buy side up here. So again, this is kind of that mindset where if you're short, okay, let's say you went short here in this fair value gap, or you went short somewhere in here, and you went short, you're still aiming for lower prices somewhere all the way down here. If you see this in price while you're in your short, we want to see down or up close candles. We want to see bearish order blocks send price lower if we're short. If I'm in a trade and I'm short and I see this, I'm not confident in holding this short. I'm expecting price to possibly reverse. Okay, so think with that logic in mind. Order block is disrespected. Fair value gap. This turns into a breaker. These last three candles is a bullish order block. It's a beautiful buy, targeting buy side. All right. Here's another example where we didn't have a market structure shift per se, but there's still a buying opportunity. We drop down, take out sell side liquidity. Okay, we rally up. I'm drawing this little line here to show that this high was not taken out. Okay, but how can you trust to buy without seeing a market structure shift? our PD array is getting violated. We have a fair value gap here. Does that offer any kind of resistance to take us lower? Nope. Gets blasted right through. One candle. Had no affinity for it. Did not care about it. Next PD array. We have this up close candle before this rotation lower. That's a bearish order block. Take that opening price. Does price respect that at all? Does it act as resistance? Do we care about it? Absolutely not. Gets completely blasted right through. This entire up close candle gets overlapped. That does not act as resistance. So now, if price were to come back down here, and I'm drawing this hypothetically, we form a fair value gap here and here. Let's say this high wasn't taken out. This candle just opened and immediately started trading down. I would feel comfortable buying that because we already violated one, this fair value gap, and we blasted right through this bearish order block. So I don't need to see this high taken out to feel comfortable buying. I would buy as soon as this candle opens. I would buy that. Treat this up close candle as a breaker. These consecutive, all these like 7, 8 down close candles, treating that as one bearish order block, bullish order block, my bad. Okay, so I would feel comfortable buying without seeing this high taken out because PD arrays are getting disrespected after clearing sell side. Okay, you still have to have some sort of logic, some sort of bias as well. Buy side target up here. All right, simple enough. Again, if anybody has any questions, type in the chat room or unmute yourself, whatever you want to do. I think I have, okay, so that's all the examples for that. And then let's go back one more time when I would like to look for a market structure shift. Right here, this PD array, does it act as resistance? It does, right here. We trade up into this fair value gap, it sends us lower. So I'm waiting, I'm sitting on my hands, I'm waiting for PD arrays in this price leg to get violated. Rally up, then we see this fair value gap get completely overlapped. Then we take out a high. Now I'm comfortable buying here or here, take it up to buy side. All right, simple enough. Anybody have any questions before we hop on to our next topic? Hopefully I explained that pretty well. Again, I am recording this if you want to go back and watch it a few times. And that's actually great timing. I want to spend no more than 15 minutes a topic. I would like to ask why the first fair value gap uses the following instead of the one above. The first fair value gap uses the following. I'm not sure what you mean. I'm not sure what you mean, Eason. Are you talking about these? Why the first fair value gap uses the following. If you're talking about this, price is just retracing down. This is a bullish order block. These last two down close candles, okay, there's nothing wrong with entering in this higher fair value gap here. There's nothing wrong with that. I think I actually took this trade. I think I had this trade on YouTube. I entered in this higher fair value gap here. Price traded down into this lower one. There's nothing wrong with that. I'm assuming that's what you're talking about. But let's keep going. So our next topic here, new day opening gaps. Okay, new day opening gaps and new week opening gaps are absolutely crucial in my trading. I mean, I'm telling you, you just got to have it, okay? So here's what I do. I'm going to change my window real quick. We're going to hop on TradingView. Let's do this. All right. No, it's all good, Eason. If anything, you could just tell me after we're done here so we don't go over time. We'll try to keep this at about an hour. So here we go. New day opening gaps. First, we're going to talk about how to draw them, how to put them on your chart, and then we'll look at some examples of how you can use them in your trading to find setups, okay? So basically, your new day opening gap, we're going to ignore these two candles because it's dojis, it's not really clean. Let's look at like right here. So basically, on your daily chart, and this is important in TradingView, you want to make sure you go to symbol in your settings and you have this color bars based on previous close. Make sure that's checked off. If you have that checked on, it's going to throw you off, okay? It's going to mess with your settings and your new day opening gap is not going to be accurate. So have that turned off. Okay, save it. And then your new day opening gap, anytime on a daily chart, okay, we're on a daily chart here, the separation between the closing price on a daily candle and the opening price on a daily candle, that is your new day opening gap. Okay, so we're going to zoom in really close here. This is a daily chart. This candle's close right there. That candle's open. That right there is your new day opening gap. Okay, that will be used as support on the lower time frame. We'll look at some examples. That's huge. The same thing applies to new week opening gaps. Okay, so let's go to a weekly chart. It's the same thing. Your new week opening gap is the closing price and the opening price. So here's a weekly chart. Zoom in really tight. This is where we closed last week, and this is where we opened on the new week. Okay, so this is your new week opening gap because it's based off a weekly chart, and that will be used as support and resistance on the hourly chart, 15-minute, 5-minute, 1 minute, and so on. Now, that's one way to mark it up. You can also do this. Your new day opening gap is the difference between 5 p.m.'s close and 6 p.m.'s open. So for the markets, there's a break at 5 p.m. There's an hour gap in trading. So if we go look at it right here, okay, notice the time down here, okay, on the x-axis right here. This candle here, 4:55 p.m., we close right there. This candle opens lower at 6 o'clock. Okay, so we close at 4:55. This is a 5-minute chart, so pretty much we close at 5 p.m. and we open at 6. So that's an hour gap. Okay, so we open right there. That right there is your new day opening gap. That will be used as support, resistance. You could use that to frame setups, and we'll look at that on the lower time frame. But for simplicity's sake, as you can see, daily chart, where we closed yesterday, where we opened today, easy to draw. Now that we have that, let's look at some examples on how I use that in my trading. So just give me a second. Get it pulled up here before I switch my screen. All right, so switching my screen here. These are new day opening gaps, okay? New day opening gaps, new week opening gaps, they have the same function. One isn't stronger than the other. They all are the same. So gray area here, new day opening gap, the midpoint is consequent encroachment. That's also a key level, okay? So you want to have that on there. This is when I love to see setups form, okay? I love setups that form on top of new day opening gaps for buys or below new day opening gaps for sells. We have a down close candle here. We trade down. Notice the bodies stopping dead in its tracks right at the low of that new day opening gap. We rally away, taking out a high. We have a fair value gap. This down close candle is a bullish order block, and we have a small volume imbalance in there. Okay, I could zoom in. Small volume imbalance in here. We trade down. Why am I trusting this setup? Because it's laying right on top of that new day opening gap. That's support. We trade down into the order block, yes. Into the fair value gap, yes. Into the volume imbalance, of course, but more specifically inside of that new day opening gap. Sends it higher. That's a bread and butter trade right here. From new day opening gap to new day opening gap, and you could be done for the day. Here's another example of how I use new day opening gaps as resistance. Okay, we have buy side up here. We clear the buy side. You can see I have it labeled here. This is a new week opening gap based off the weekly chart. We trade up. Look at the precision here. Perfection to the tick. A lot of people don't have the new week opening gaps and new day opening gaps on the chart. They're missing out on precision elements like this in price action that occurs every single day. Every day, every week. I'm telling you, it's nonstop. It's algorithmic. To the tick, perfection, reversing on the dime, retracing, fail to take out this high. Okay, that's the high of the session. We break down. Again, this is my favorite setup to trade. We have a fair value gap. After clearing buy side, the high of the day is in place at the new week opening gap. Where does the setup form? At the low of the new week opening gap. Can you trust this fair value gap alone without knowing there's a new week opening gap here? Absolutely. But after seeing this, it gives you more confidence, okay? I'm way more confident taking this trade knowing I have the new week opening gap offering support and resistance rather. Take it lower, and then just beautiful sell off. Beautiful. Another example, one of my favorite trades, I believe I took this as well. Fair value gap here. Where does that fair value gap form? Where does this setup form? On top of this new day opening gap or new week opening gap, whichever one it is. Okay, beautiful. We trade down, clearing the sell side liquidity. We rally, fair value gap. You don't have to get this entry here. I didn't take this entry. I like to see us get above the new day opening gap, and then I feel comfortable buying. So if you missed this, no problem. Just wait. We rally up, fair value gap, down close candles, bullish order block, new day opening gap entry. Beautiful. Beautiful. It's an edge. Okay, this is a trader's edge. Not a lot of people have this on their chart. Go watch your live streamers. Go watch traders you see on YouTube. They don't have new day opening gaps and new week opening gaps on their chart. It's huge. You got to have it. All right. Can you trust this fair value gap alone without knowing there's a new day opening gap here? Absolutely. But you tell me, if you see that we cleared sell side, rallied up, leaving this fair value gap open, breakaway gap, you see this fair value gap laying on top of the new day opening gap, which we now know acts as support, and we have buy side here. Wouldn't you be more comfortable with taking this buy? I would, because that's support. That's real support. Target buy side, and you see we continue to rally. It's beautiful, textbook. All right, let's look at some more. Okay, this is a new day opening gap. It's just in purple now. Sell side liquidity. We drop down, have it labeled here, clearing the sell side. We rally up, trade down again, fail to take out this low. I'm pretty sure there's some SMT divergence if I remember this day correctly. But let's zoom in here. We have a down close candle. Small little fair value gap here. Where does this fair value gap form? Starting to get repetitive, isn't it? Right on top of that new day opening gap. Can you trust this fair value gap alone without knowing there's a new day opening gap there? Sure. But doesn't it give you a little bit more confidence knowing that you have that new day opening gap offering support? Absolutely. We rally. Buy side here. We have another fair value gap, trading into it there. Clearing out the buy side here. All right. I believe I have a couple more examples, then we'll move on. Here again, new day opening gap. Consolidating through it, consolidating. We blast through it. I'm comfortable taking this buy. Okay, this fair value gap is a breakaway gap. This is beautiful. We consolidate, then get this explosive move higher. I want to see this fair value gap open. I'm interested in buying this fair value gap. And I actually did take this trade too. It's on YouTube. May 21st, if you wanted to check out this trade. So buying here, expecting this fair value gap to stay open, but guess what? If we do trade down into this fair value gap, I'm not worried about it. Why? We have the new day opening gap laying right on top of it, and we know that's real support. Nobody else has this on their chart. They don't pay attention to it. Gotta have it, okay? It's important. Rally up, trading into a 15-minute fair value gap, and then we reverse. All right, a few more examples here. Okay, this is just us trading past consequent encroachment of the new day opening gap. I also entered this trade. It's on YouTube, tagging equal highs. If you want to watch this trade, this is from May 30th. All right. I took this buy. We closed past new week opening gap, that consequent encroachment, closing past that. That's something that I like to see. Trade down to this fair value gap, treating this lower one here as a breakaway gap, targeting buy side. Again, below that midnight opening price, your best buys are below that price level. And that is it. That is it for new week opening gap and new day opening gaps, okay? That's how I'd like to use them in my setups. It's an insider's edge. It's a massive advantage for those who know how to use it. Gotta have it on your chart. All right. Any questions regarding new day opening gaps and new week opening gaps before we move on? Did that make sense? We're all good. Need some water up in this thing. Whew. Hold on. All right, we're good. Take a little break here. We're on schedule. We have 4 topics. I want to spend at least 15 minutes on each topic, so that way we can be out of here in about an hour and still have time for questions. So it's 10:55, or 5 minutes ahead, which is good. So if you guys have any questions, confusion, just let me know. All right. Next topic, liquidity sweeps. All right. I believe it was Coco who asked how to defer or differentiate the manipulation leg versus a displacement leg. So let's take a look at that. I have some examples drawn up as well. Let me get that pulled up. Okay, let me change my screen. All right, so here we go. The difference between a manipulation leg and a displacement leg. So first, a manipulation leg is something like this here, where we trade down, clearing the sell side. This isn't displacement. This is just simply a run on sell side liquidity to reverse. Okay, so how to differentiate between that and between something you see here where we displace higher, trade down, and then go higher. So let's talk about it. First example here, all right? Let me say this. When it comes to displacement and manipulation legs and all those things, you have to have a bias on the daily chart. Okay, if you don't know where the daily chart, where that daily candle is reaching for, you're going to get chopped up on the lower time frame, especially like the 1 minute or the 5 minute. So make sure you have that skill set of understanding bias on the higher time frame. So let's say daily chart, we're bullish, okay? And what is this, February? Yeah, this is when we're trading near all-time highs. Okay, so we're definitely bullish on NASDAQ. We're trading down. Traders will see this and get chopped up saying, okay, we broke down. They'll see this low taken out here. Let me zoom in. They'll see this low taken out and say, okay, we've taken out short-term low. We have a fair value gap. We have an up-close candle. Let's trade that and look to go short. No, this is not a displacement leg. This is simply manipulation. This is a run on sell side liquidity to go higher. Okay, we're bullish on the daily chart, trading near all-time highs. I'm seeing this as simply a run on liquidity. This right here is what you're looking for as an entry. Okay, so you still have to have some kind of narrative, understanding where price is likely to go. That will help you avoid a lot of losing setups. So you could trust taking this buy here. You can trust taking this fair value gap. I remember buying this. It's on my YouTube as well. Targeting buy side. I have a lot of examples, so don't worry. All right, let's see. I have to remember what I marked up here. Okay. So right here. Let's say, all right, this is when narrative comes in. Are we looking to buy this leg here? It's not clean, but it's just an example. We have buy side target up here. I'm pretty sure this was CPI or NFP or something of that sort. Massive news driver at 8:30. We're rallying. We tag buy side. We have a fair value gap here. Yes. Are we looking to buy that? Absolutely not. We've reached a buy side liquidity pool. Okay. This price leg here could possibly just be a Judas swing, a run on buy stops. Okay, I'm not looking to buy this fair value gap or anything in here. I'm waiting to see how we trade after reaching buy side. We break down. Now I'm trusting this fair value gap because the context is we've already worked in a deep premium. We're reaching buy side. Okay, we're way above where we closed yesterday. If you were to put your opening range gap, we're likely in a deep, deep premium. Break down. This is a displacement leg because it matches the narrative of seeing lower prices after taking out buy side. We have more examples, don't worry. All right, same thing here. This is perfect. A lot of traders probably lost on this setup. For one, you don't have the new week opening gap on your chart. You didn't see that we traded to the high of that perfectly, so you missed out on that. But this leg here, that's displacement, right? We're displacing. It has a fair value gap. It has a down close candle. Isn't that what we want to see? If you can mute yourself, unless you have a question. Everybody's free to unmute themselves, by the way. So we have a fair value gap here, down close candle, bullish order block. Look at this high here. We take out that high. Isn't that a market structure shift? We're continuing. We're going higher. We're bullish. No. One, we're trading perfectly to the high of that new week opening gap. Two, we just cleared buy side liquidity. Okay, equal highs. So we're trading into buy side, trading into a new week opening gap. Are we looking at this as displacement or just simply reaching deeper into a premium, clearing out the buy side above this high before going lower? Okay, this is a manipulation leg. This right here is displacement. This is what we're looking for to go short. Okay, shorting here, take it down. Let's look at some more. Right here. All right, remember, we're trading. This is also an example I used for the new week opening gap. But we're trading into that new day opening gap, new week opening gap. That's that gray rectangle you see here. Traders probably don't have that on the chart, so they're already at a disadvantage. We drop down. This is displacement, right? Nope. We're trading into sell side liquidity. We're taking out sell side. We have a large fair value gap here. Okay, trading to that as well. We're also trading still inside of that new week opening gap near the low of it. Am I looking at this as, okay, we're taking out a low, we're taking out a low, okay, that's a market structure shift. We have a fair value gap, up close candle, bearish order block. We trade up into that. I'm looking to go short. Absolutely not. Okay, the narrative is, one, this is May, so we're still bullish in May. We're clearing sell side, trading into this large fair value gap. We're still trading inside of that new week opening gap. Okay, I'm not looking at this as displacement. I'm seeing this as simply a run on sell side. So I don't want to short that fair value gap. Do not do that. Avoid it. Don't do it. This right here, this is displacement because it fits our bias of bullishness, and we cleared sell side, buy side up here, and then you can see the rally. Let's see what I marked up here. All right, so right here, it's kind of the same example. We have a low here. We drop down aggressively, taking out this low, taking out this low. Does that mean price is heavy or we're going for lower prices? Absolutely not. This is not displacement. This is just a run on sell side liquidity. See the sell side I have annotated here? We're trading into that, taking out sell side, trading into a 15-minute fair value gap, and look what we have here, a new day opening gap. So I'm not shorting this. Absolutely not. Because one, if our bias on NASDAQ is bullish, which we were, notice here, buy side liquidity, all-time highs. So we had all-time highs just right here. We're trading at all-time highs. We're bullish on the NASDAQ. We're trading into sell side. We're trading into a 15-minute fair value gap. So I don't care that we formed a fair value gap here after taking out a low. I'm not seeing that as a market structure shift to go short and take it lower. Our bias is bullish. We've already taken out sell side, and we're trading into discount PD arrays. This right here, small little fair value gap, that's all the displacement I need right there. It's fair value gap here on top of that new day opening gap. That is where you want to get your entry, go long, target buy side. All right. This is our last example here. Let's see. I have a lot of examples, so I have to make sure I don't get chopped up. Yeah, I'm looking at this. I don't remember what it is I wanted to talk about. I'm going to be honest with you. I don't remember. I should have left some notes. Coco, that helped. That's good. Remember, I'm recording this, so you can always go back and watch it to get a better understanding. I know I'm moving through this kind of fast, but I'm glad it helped you out. That's good. Let's see how we're doing on time. We have one more topic to go over, and we have 25 minutes to get it done, so we're doing great on time. We're doing great. I'll take questions, or if anybody wants me to go over something, I could spend about 5 to 10 minutes going over something that wasn't in the lesson. Yeah, no, it's going to be recorded. I know some people joined in late. I may post this first one on YouTube just so people can get a glimpse of what the webinars are going to be like. But after that one time, it's only for subscribers and paid members. So this is something I'm doing just for you guys. All right, but let's move on. We have one more topic, and we'll get you guys out of here. Let's see. Open my notes real quick. Let me do this actually. Let me add. Give this person access real quick. I forgot. It's record. All right. Last topic is, I believe it was kind of similar, if I'm not mistaken. We went over market structure shifts. We went over new day opening gaps. Yeah, so it was pretty much liquidity sweeps and manipulation legs. So honestly, that's pretty much it. I kind of covered 2 topics in that one lesson, talking about displacement and liquidity sweeps. So that's pretty much it. We have about 20 minutes still. I'm not going to go over liquidity sweeps because we pretty much already talked about liquidity sweeps. Let me see. Yeah. That's pretty much it. Anybody have anything want to go over? We have 23 minutes to go over whatever you guys want to learn about. I could pull up TradingView, go over some examples. If there's something you want to point out, look at a different market, just let me know. We'll do it. Let me know. I have the chat pulled up, so I'm looking at the chat. Or if everybody's good, no questions, nobody needs help with anything, we can end this early. Completely up to you guys. Go over the AM session. Let's do it. Let's do it. Actually, the AM session was kind of trash. I don't know if it's worth it. Let me see. Let me see. One second. Yeah, we ended the AM session early. It wasn't doing anything exciting. But let me change my screen. I see your question, Easton. Just a second. AM session. We didn't do anything this AM session. 20. There's nothing to go over. It's all low probability. I won't even do a market review for today's price action. We're just chopping around going sideways. We just consolidated. So it's not worth it. I want to understand why sometimes the entry is to choose the closest fair value gap, wait for the bottom fair value gap. This is just an example where you may have to accept taking a little bit of drawdown. But let me actually, I took this trade and I explained my stop loss management because I entered in this high fair value gap as well. That wasn't a problem. I entered up here, price came down, traded all the way down here. That's fine, not a problem. Price can it's perfectly permissible for price to trade down here. These 2 down close candles is a bullish order block. All right, now in my opinion, I would want to see this fair value gap stay open, treat that as a breakaway gap, and I would like to see price rally from here and go higher. But if you don't get that, it's not a problem. You're not on the wrong side of the market. You didn't do anything wrong. Price just decided to come down into these last 2 down close candles, which is an order block, and we have this fair value gap here. But your stop loss has to respect that. Has to. But I took this trade and I didn't get this fair value gap entry either. I bought up here and I had to sit in a little bit of drawdown, but that's fine. There's nothing wrong with that. right. What about anybody else? Anybody else want to go over something? Certain topic, something they're struggling with? I know somebody's out there with questions. We still have some time left. Got about 21 minutes. But yeah, no market review for today's price action. We didn't move this morning. Who was that? Easton, I'm gonna send you this video I posted on Instagram. This is actually the trade I took, the trade you're seeing on your screen. I took this trade and I explained my stop loss management and all that. So that should give you a little bit more insight. Should be helpful for you. No problem. I see some people typing, so I'm gonna let them type. With me, it's just psychology, too much emotions. Skills, not a problem. I mean, yeah, trading is 90% mental, 99% mental, 1% pushing the button. But I mean, that comes with time and experience. We all start off impulsive, gambling, over trading, over leveraging. Like we all do that in the beginning. But over time, you just have to tell yourself, like, I gotta be better. Yeah. But I mean, I was the same way when I first started. Like, I would over trade, I would over leverage, revenge trade. I hated losing. Like, I wanted to trade every single day. I wasn't patient. I felt like if I went a whole week without taking a trade, I'm wasting my time. I feel like I always need to be doing something. But now, cool, calm, and collected. I can go a whole week, a whole 2 weeks without taking a trade, and I'm perfectly fine. How do you overcome it? Just time. Time and understanding that you could do much better than 90% of traders out there by only taking one good trade a week. That's it. That's it. Like, once you understand that you could take one good trade a week, one good trade every 2 weeks, shoot one good trade a month, and still outperform everybody. Not that it's a competition, but just understanding that you don't have to trade every single day to be great at this. So it's a lot easier to be patient when you understand that all you need is one trade every few weeks and you're good. How do you determine which session to trade using the economic calendar? Pretty much based on my trading plan. So let me pull up my trading plan. This is also in the Discord if you want to look at it on your own. Just a moment. All right, so here's my trading plan. All right, no trade days. This is all based on the economic calendar, as you can see. How do you determine which session to trade? All right, so if we have, this is pretty much the only days I focus on when it comes to low probability days. If there's a no news Monday, it's best to trade the PM session. Why? Because think of the weekend like you're taking a nap, okay? Imagine you take a nap for 2 days, Saturday and Sunday over the weekend. That is the stock market. When you have no news on Monday, there's really not that much volatility coming in, and the markets can be mixed. It could be choppy. ES can be going up. Dow could be going down. NASDAQ could be moving sideways. The market is just waking up. So it needs time. It needs a news driver. It needs something to get everything back in sync. But so many people are in a rush. As soon as Monday's trading gets here and we have no news, it's just an empty blank Monday. So many people are in a rush to go out there and start pushing buttons. It's a choppy market. So no news Monday. Okay, that's a day that I highly recommend everybody avoid, especially if you're new. Thursday of NFP week. Why do I avoid Thursdays of NFP week? Well, it's because, think about it. If you're trading Thursday, or just think about it like this, as far as the economic calendar, if we know that we have NFP tomorrow, let's say today's Thursday of NFP week. If we know we have NFP tomorrow, and we know that there's going to be a lot of movement tomorrow, are the big banks and the hedge funds and deep pockets, smart money, are they going to want to be doing all their business on Thursday or Friday when the news hits? They're going to wait to do all their manipulation, all their money making, all their business. They're going to wait for tomorrow, NFP Friday. So Thursday, expect consolidation, expect a slow market. Will there be days where there's Thursday of NFP week and it's just super clean, 100 handles, easy day? Of course. Nothing in here is 100% guaranteed, but more times than not, if you have a heavy hitting news driver the next day, expect the previous day to be chopped. U.S. bank holiday is pretty obvious. Like we have Juneteenth on June 19th. That's a bank holiday. Some people like trading on holidays. Sometimes the stock market closes early at like lunch. I don't recommend that, but to each their own. The day after a bank holiday, I would never trade the day after a bank holiday. That's pretty much the same price action you get on like a no news Monday. So the bank holiday, markets are closed. All right, everybody's in a rush. Retail is in a rush. Okay, bank holiday is over. Let's go out there. Let's start pushing buttons. No, sit still. Wait for all the retail to get chopped up in the mixed markets and the confusion. Everybody's so quick to gamble and press a button. Just wait. Just wait. AM Fed chair event. So whenever the Fed chair is speaking in the AM session, I don't like to trade. Okay, a lot of times you'll have like a Powell testimony at 10 a.m. I don't like trading, and my mindset is because eventually I want to get to the point where I manage funds for clients and all that. I don't personally think it's a good business practice to trade while the man who is in control of the economy is talking. To me, that's just not safe. He could come out and say anything unexpected, and we all know that if Powell says something crazy, the market's going to react. And the last thing I want to happen is I'm in a trade or I'm managing funds for other people, and we have the Fed chair talking while I'm in a trade, and he comes out and says something that nobody expected, and then the market goes crazy, 500 handles in 10 seconds or something like that. So that's an example where I'll just wait for the PM session. Okay, if the man who runs the economy is talking, I don't want to be in the market. It's just, to me, that just makes no sense. And same thing with the PM FOMC event. All right, I avoid that AM session. If we have an FOMC event in the PM session, think about it like NFP. If we know we have a heavy hitting event in a few hours in the PM session, why would I trade the AM session? It's just going to chop around. It's going to consolidate. It's not going to move. Why? Because smart money, deep pockets, banks, hedge funds, large institutions, they're all waiting for the PM FOMC event. They're waiting for that volatility. They're waiting to see what's going to be said. They're all sitting on their hands waiting for the PM. So I don't want to be in the AM session pressing buttons because we're not going to move. We're not going to do anything. It's going to be chopped. And that's when you get your blown accounts. That's when you put yourself in drawdown. That's when you invite emotion and over trading and gambling and all those things. But you could cut all of that out of your trading by simply avoiding these days I have listed on my trading plan, which are all low probability. So, I'm telling you, man, it's huge. And another thing, if you see a no news Monday and the price action is super clean, everybody's winning, catching setups, who cares? Because 9 times out of 10, that's not going to be the case. Same thing with Thursday of NFP week, day after bank holiday, all of these days. There's going to be times where these low probability days are going to be super clean, and you're going to miss setups because you decide to sleep in because you thought it was going to be low probability, and it turns out everybody caught wins. Who cares? It doesn't matter. 9 times out of 10, retail is going to get chopped up trading days like this. Moving on. Been doing revenge trading a lot too. Back in April, forced myself to trade only one macro per time to pick up. I'm telling you, that's what you have to do. That's what you have to do. One trade a day, one trade a session, that's all you need. It's really hard to blow an account when you're risking 0.5% and taking no more than 2 trades a day. And you're not even trading every day of the week. I rarely have weeks where I trade every single day of the week. I can't remember the last time I had a week like that. There's always a low probability day thrown in the week somewhere, a no news Monday. If it's NFP week, Thursday, low probability. All right. If we have a week where the Fed chair is speaking, I'm probably not trading that day. I rarely trade every single day of the week, but I'm doing just fine. So reduce your trade frequency, reduce your risk, take only high probability setups on high probability days, and you'll watch how hard it is to blow an account that way. It's hard. But we have 10 minutes. So anybody have any questions? Anything else you want to go over? It could be about anything, charts related, price action related, psychology related. Okay, this is a teaching webinar. We're all here to get better. All right. You guys are, paying for my knowledge and my skill set. So I want to pour into you guys, make sure that whatever questions you have gets answered. I want to help you guys as best as I can. I want all of us to be profitable, making money consistently. That's the goal, right? I'll wait a couple more minutes, let some people type. But if we have no questions, then we'll go ahead and wrap it up. And then again, for those who joined in late, I am recording this. This will be the only webinar I post on YouTube, just so people can get a glimpse of what the webinars are like. But the rest of them will be private, and I'll only share them in the subscriber chat room for you guys. And we're doing this every other week, so pretty much twice a month, every other Friday. So next Friday, we'll have a group discussion. There won't be a webinar. We'll do the little podcast group discussion thing. And then the Friday after that, we'll do another webinar. I still see some people typing, so take your time, no rush. Type away, guys. Type away. I gotta go. Thanks for the teaching. No problem, Coco. I'm gonna upload this soon. Hopefully you found it helpful. Appreciate you tuning in, man. Do you switch bias if price is going against your analysis but price action is clean? Do I switch bias if price is going against your analysis? Yeah. Most weeks I have at least like 1 or 2 days out of the week where I have to switch my bias. Like I'll be looking for higher prices, but dollar will start to rally and go higher. Then S&P would start to drop, Dow will start to drop, and then all of a sudden I'm like, okay, I don't really like the idea of buying NASDAQ anymore. Let me see if I can find a short that makes sense. So yeah, I switch my bias. Even if it goes against my analysis on the daily chart, if I'm looking for lower prices, or technically I'm looking for higher prices on the NASDAQ right now. So if I'm looking for higher prices on the daily chart for NASDAQ, but the AM session, dollar's just going to the moon, it's just rallying, going higher, then I may be a little hesitant to buy the NASDAQ, and I'll be comfortable going short. Get to be flexible, for sure. That's a good question. But I think that's it. I think everybody's pretty much burnt out on questions. We'll do this. What's the next Friday? The 28th. Friday, June 28th will be our next webinar. But of course, if you guys have questions and all that, I've been getting a lot of private messages. Feel free to reach out to me privately if you want to send me some charts, have any questions or whatever. I respond fast. I keep my phone on me at all times, so I'll get back to you. But I appreciate you guys tuning in this first webinar. Hopefully you found it helpful. I'm probably not going to get this uploaded to YouTube until a couple of days, but when it is posted and shared, you'll be able to go over, watch it a few times, and hopefully gain some insight from it. But we're going to wrap this up. No problem, Eason. No problem, KP. Hopefully you liked it, enjoyed it. But love you guys. If you're trading the PM session, best of luck to you. I personally will not be trading the PM. I'm done for the week. Okay, I had a decent week. And we'll be back in the live streams, not tomorrow, Monday at 9:30. All right? Love y'all. Be safe. See you in the live streams Monday at 9:30, New York time. And have a great weekend. All right? Peace.